Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by United Wholesale Mortgage.
Does your wholesale lender do this for you? Free customizable marketing materials, online loan tracking for your clients, returns your past clients to you, and complimentary client retention campaigns. Don't you think it's about time you found one that does? Partner with United Wholesale Mortgage and receive these benefits and more.
Hi, welcome to Master of the Markets. I'm Barry Habib at MBS Highway. This is created exclusively for Mortgage News Network. Well, it was yet another wild week, especially in the stock market. And I know it's got to be a little bit unnerving. We talked about and warned about how once breaking that 200-day moving average, stocks can move significantly lower. And yes, they have done so. But many of you, even last week, were wondering, can they go lower still? And we did warn about certain levels. And we closed at 1921 on the S&P 500. It's been a very volatile, rocky, choppy manner of trading. And people are wondering, is this the bottom? Well, I have to caution you that there is potentially a test of a level at 1821. That's right, 100 points lower on the S&P. So let's see if the stock market rights itself this week. There's not a lot of economic data to digest. So the technical factors do tend to take over. And if the stock market starts to slip, could drop all the way to 1821 on the S&P, or about, as I said, 100 points lower. So don't take your seatbelts off just yet. There's going to be some real strong volatility, in my opinion, ahead. All right, speaking of news, and yes, we said this week there's not going to be much. Can't believe that summer's over already. Labor Day has come up and snuck on us. It seems to do that quicker every single year. But right before that, on Friday, we did get the jobs report. And this is one of the biggest, if not the biggest, economic report that comes out every month. The number missed expectations, but it wasn't a terrible report. I'd like to just go through a couple of things that, to me, are pretty interesting. The jobs number came in a little bit lower, but what you may have seen a lot in the headlines is this unemployment rate at 5.1%, which looks pretty darn good. But when you start to peel back the onion, a lot of people are leaving the workforce. The participation rate is very, very low, multi-decade lows. And because of this, it's a lot easier to get the unemployment rate lower since there are fewer people in the workforce. Now, I'm not saying it's a bad thing to see 5.1%. I'm just saying that you almost have to take it a little bit with a grain of salt. Now, a couple of things that did catch my eye were the hourly earnings and the average work week. They did rise. And this is of importance to bond prices, to interest rates, and to the Fed, because it starts to suggest a little bit of wage pressure inflation. Now, it's not huge, but from these very low levels, you don't need that much. And since the Fed's kept interest rates at zero, for the Fed to start thinking about hiking. Now, they're going to have that big meeting on September the 17th. Right before that, the 16th, we'll talk about this more next week, there's a big inflation report, CPI. So here's the thing. The bond market, seeing perhaps a little bit of inflation, is really counting on the Fed to hike rates to curb that inflation. If this inflation persists, even at these lower levels, and the Fed does nothing, the bond market will take matters into their own hands and interest rates will go up. It's counterintuitive. So if the Fed doesn't hike, rates probably go up. And how about this one? If the Fed does hike September 17th, then I am pretty sure that you will see interest rates improve. But we'll talk more about that next week. In the interim, if you want to guide yourself throughout this, get a free subscription to MBS Highway just by clicking on the links. We break this down to you every day, advise you, and give you so many tools to help you, help your clients, help your real estate agents. Talk to you next week. Promises to be another exciting one. Bye-bye.
Today's Master of the Markets was brought to you by United Wholesale Mortgage.
This is Mortgage News Network.